You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster GIOVINAZZI from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means our broadcast week has commenced here on the Options Insider Radio Network. That means it's Monday. That means it's noon Central, 1 p.m. Eastern. Yep, it's time for the option block, a.k.a. the old OB, as the cool kids call it. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the aforementioned network. Please be with you throughout the whole week here. Got shows hitting you pretty much every day here on the network, sometimes multiples per day like we're going to have today. So keeping you guys informed, up to date on what's going on. Some big breaking news in the world of the volatility space today. We're going to get to that in a little bit. Hopefully a little bit enlightened and or entertained as well. You're tuning into a lot of content. Want to make sure you're liking it. Certainly by the numbers you guys appear to be. So glad to see so many folks continuing to join the network to discover the program, especially now in these troubling and trying times. If you want to help out, do your part. Get on out to your platform of choice, wherever you listen to this fine program. Could be Stitcher, could be Spotify, could be iTunes, wherever you get it. And just leave a comment, say or a review. Say, hey, we like this. This is why. Or if you don't like the Rock Lobster for whatever reason, you can say this is why. But either way, leave those reviews out there. They help new people continue to discover the network. And we love to see all the new earlobes coming in these days, because these are, like I said, these are trying times. So we can all get through it collectively together here on the network. And of course, keep those questions coming too. We do love to hear from you guys. And let's see who else we're going to hear from on the program today. Not just me here on the old All-Star panel. No. First, let's go out to a sleepy, a quiet, a tranquil hamlet, where we are joined once again by the Unklest of Mikes, a.k.a. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the Option Block on this fine and indeed Uncle Mike type of Monday, sir.
It's always good to come at you from the sleepy hamlet, and all is well, and like in that country music song, life is good today.
Yeah, I guess we're just in the prelude to the show. We have talked up the market, so getting a little Uncle Mike sheen on the markets today. And also joining us, once he joins us, going to talk him down, it's that diehard cynic, the Rock Lobster himself, Mr. Andrew GIOVINAZZI from OptionPit.com. By way of Carmeline Capital, yeah. Mr. Rock Lobster, welcome back to the program. Some of our listeners were concerned. They were tweeting out stuff this weekend about how apparently it's unseasonably hot up there in Maine in the 90s or beyond, so they were worried we have a cooked rock lobster. Is that the case, sir?
Well, were they actually worried about me in Maine? I feel my heart feels warmer. It melted my normally cold and dour heart.
Apparently, so I'm all of a sudden I'm getting inundated with heat advisories out of Maine and concerned about the rock lobster. I was like, maybe you should tell him. But hey, we appreciate the love nonetheless.
It was warm and quite lovely, and of course, what that does is it makes the ocean water just warm and delightful. So there's no real complaints, and there's a thunderstorm coming our way to make everything wet again. So, yes, it has been unseasonably warm, but I am not complaining about it one bit.
And hopefully you won't complain about the start of the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we break down what the heck is trading out there. And, it was seeming like maybe coronavirus concerns were starting to mount again, weighing on the markets coming into the start of the session. And then as we approach liftoff here on the network and indeed on the option block, the worm has turned yet again. And we're looking at most of the major indices firmly in the green to kick off the show here. The S&P up about 0.6%. Once again, playing the Goldilocks roll. The Dow up about 0.5%. And the NASDAQ closing in on a full percent to the upside, about 0.9% up there right now. Gold and crude also getting a little WTI over the 40 handle right now. So negative 30, or actually negative 40 not too long ago. So an 80-point swing. That's what I'm saying out there over the course of the past month and change out there in good old crude land. Coming into showtime, we saw VIX was almost literally unched. It was literally unched. It was 33.25 coming into the start of the show, right before it, which put it exactly unched. Then it was coming in right at the start of the show. It was about 32.75. That ticked down a little bit, puts it down about 0.5 point. Our old friend VVIX, a.k.a. the vol of vol, also down a little bit. Still frothy, though, at about 132.5. That puts it down about 5 handles from last show. And VXX, the product you guys like to fade, feeling the fade right now, down about 1.5 points to about 35.75. Let's go around the horn. Let's start in the land of the rock lobster. We'll get to the big news in the vol space in a second, Mr. Rock Lobster. Before we get there, what's catching your eye? What's lighting up your tape as we kick off this Monday, apparently back in the green, sir?
I guess while I was gone, we had we traded below 3,000. I was on vacation last week. And I guess that was it. And everything was okay because it's COVID and then it's not. And then it's COVID. And then all I know is that we're still in a volatile market. We're still in the danger zone. We tried to leave it for a brief while the week before last and couldn't do it. Couldn't break below 24. And we'll see how long the memory of that 5% drop lingers in everybody's head. But you can see that, you start selling Amazon, Microsoft, and Google, and you got real problems. So I don't know exactly what caused all that, besides everybody worried about the snapback in COVID. But from a vol point of view, I was just talking to a trading legion person of mine, and I'm like, okay, well, where's the target for VIX? Maybe 25 or 26. I say that would be the low for the cycle. So if it seems like as soon as we put COVID behind us, realized vol plummets and SPX kind of goes boringly up. I don't know where else the NASDAQ can go, but apparently it can go higher. So anyway, as far as all that goes, I think that's where we are. And realized vol just in the last 10 days, especially because we had those huge spikes, went back into the 30s from the teens. And I'm just wondering if it gets back there again. So I think it's amazing. You got all the tumult, but it doesn't really. I mean, stock prices are lower, but since they were about 2 weeks ago, but it doesn't seem to stay that long. So it's a resilient market, or the Fed's going to buy everything. I can't decide which.
Yeah, it's funny. It seems like the only thing that's really putting the virus in the rearview mirror is the market. Everywhere else you look, the news is kind of dire on the virus front. States reporting record increases, many developing nations out there struggling under the weight of new cases, and yet the market just charging on forward, saying, "Hey, we got the Fed in our back pocket. Let's rally ho," and rally ho yet again today. So yeah, apparently they can't stay down for long. You're right. Maybe that's what was spooking the market, Mr. Rocklop. So you were gone on vacation. There was no experienced hand at the tiller. Now the Rock Lobster is back. It is safe to rally again. If we're talking rallies, we got to talk to Uncle Mike. Mr. Uncle Mike, sir, once again, an Uncle Mike type of day. There's been a lot of them of late. What is your take on this strong start to another trading week, sir?
Well, I had a client text me today, and I think he's right. 3,100 is now the new 3,000. It's like we've been kind of in a channel between 3,200 and 3,000, and then we have like this magnet at the 33,000 level, and now it seems like we're stuck at the 3,100 level. After trading closed on Friday, bears really took over quite a bit, and I think we lost roughly, I'm not sure exactly, but roughly 20 points after the cash closed on Friday. And then last night, just watching the futures, down roughly 20. And then we rallied overnight. So now we're actually up a little bit today. So I believe we have about a 40-point range in the marketplace today. So this is definitely a day trader's dream, of course, if you're on the right side of the trades. So very volatile, but it's I've described it before, the exciting road to nowhere is kind of where we've gone, because we're really not moving in any specific direction over the whole thing. And we are still down 3% on the year for the S&P 500. So we do still have that going against us, those of us in the bull camp. I'm still have a lot of powder dry. We're still negative on the year. So definitely trying to keep my aggressive strategy on the sidelines as much as possible, because I've said it before, if we're not at least positive on the year, it's not a market strong enough to commit to. But as always, my finger is on the button, ready to become as bullish as I can be whenever I can be, based on proper trading function and decision making, of course. In looking at this is fairly broad-based, but definitely technology-driven in a lot of ways. We do have oil going above the 40 mark, but it just seems like Amazon keeps going higher and higher and higher all the time. A lot of this does have to do with technology. And so with this, Amazon's going to do well, COVID or no COVID. Even if we don't have more COVID, people are going to still use Amazon in a normal economy. And if we have more of it, then they're going to use it even more. So a lot of stocks like that and situations like that are what I think is going to drive this marketplace, because things are still pretty unknown at this point. I think in Illinois, on the 26th, I think it is. I'm not 100% sure on these dates, so please don't quote me, but I think we're going to the phase 4 of reopening. And so there's going to be a lot of things happening. I know that when we do, we might get a second wave, and there's a lot of people that are concerned with it. But on the flip side, yes, Corona is an awful thing. I'm not trying to downplay this by any means, but a vast majority of people who get it survive it. And if that's the case, then we might kind of create our own vaccine from just having it again. Now, I'm by no means a medical person, so please don't take that as medical advice. I'm just another guy trying to make sense of all of this craziness, just like everyone else on Facebook, it seems. But that's just another thing with which to look at. In terms of other things that I'm looking at, silver is holding up above the 1650 level now, and on SLV anyway. So we do have some strength being shown there, and a lot happening. Trump had his first rally over the weekend, so we might start getting rallies again. It'll be interesting to see if Biden follows suit and we start getting more rallies, and this starts to become a little bit more of a political market than it already is.
An exciting road to nowhere. I like that. It's pretty much a good synopsis for what we've seen the last few months. A lot of excitement, not a heck of a lot of net movement over that time, which is kind of interesting. Hopefully we don't see a kickoff to rally season. That's been one of the silver linings of this pandemic is the political rhetoric, or at least on that side, has been toned down. In other areas, it's off the charts, of course. But on the back and forth between the presidential candidates, it's been thankfully a little bit quiet over the past few months as more important things have shaped up of late. But now you're right. Heading into the election, we may see that ramping up. Let's see if volume is ramping up out here. Coming into, as of a few minutes ago, on the major indices out there in VXX land, or I should say VXX, that's coming up. VIX land, doing a pretty robust amount. I think the swing in today's market driving some paper, because the ADV is just a tick under 400K, 399, and as of a few minutes ago, VIX was already closing in on about 100K shy of that. Is that 291? as of a few minutes ago. SPY, 2.6 million on the tape. That's right around half of its ADV, which is about 5.4 million. The S closing in on 600K. The ADV, 1.2 million, so right about half out there as well. The Q's, 346,000. The ADV, 917,000. So this big move in the NASDAQ, not enough to really spark a lot of outlook or optimism there. IWM at about 301,000. The ADV, 691. So small caps also surprisingly quiet out there, at least from a volume perspective. But what's not quiet, Mr. Rock Lobster? Let's get to this one. This is the big deal. We'll have to get into it more, of course, on vol views later this week, but we can't ignore it. It's a big elephant in the vol space in particular, and then everyone out there likes to trade themselves some ETNs. Credit Suisse, they of some infamous ETNs out there, including our old friend TVIX, announcing this morning they're getting the heck out of Dodge, at least when it comes to the ETN business, or all of their partnership ETNs with Velocity shares are going the way of the dodo. They will continue to trade up to July 10th, and that's pretty much it. And they're all going to shut down after that. So if you're wondering what that includes their 3X gold, long gold ETN, which is UGLD, their 3X long silver ETN, USLV, their 3S inverse gold ETN, which is DGLD, 3X inverse silver, DSLV, 3X long nat gas, which is UGAZ, UGAZ. I guess UGAS was not available. 3X inverse natural gas is DGAZ, DGAZ. We got the daily inverse medium VIX, our old friend ZIV. We talked about that recently on vol views. Don't really mention that one that much. Doesn't get a lot of love. That's probably why not a lot of people trading it. And then, of course, the short-term VIX ETN, which is VIIX. And then the mother of them all, the one we like to slam quite a bit on vol views, TVIX. TVIX, this lion of a product. You guys have been trading it up en masse of late, going the way of the dodo out there, which, again, if you've listened to vol views for the better part of the last decade, we've taken our share of swings at TVIX over the years. I think it's fair to say it is not our favorite volatility product. So if you listen to that show, you probably knew this was coming eventually, but a little bit of a surprise to see it just unfold kind of out of the blue this morning. Mr. Rock Lobster, this is a product we've kind of piled onto quite a bit over the years. Finally going the way of the dodo. TVIX, what are your thoughts and what are your crazes in the pit chat thinking about the end of an era out here in TVIX land?
I'm mostly concerned about the SIV that I've owned for the last 6 or 7 weeks that I almost make money on it and it goes right back again. So what it looks like is they're out of the leverage game. It's not worth it. The TVIX product has always had problems, and I think if they get out of it without a lawsuit, I mean, it just went to 1,000, right? And now it's $100, so it's down 90% from its top, something like that, right? Down $90, $900. So personally, I think there's enough leverage and volatility that, just good old one-to-one products are fine. I think these do create some market distortion, and we saw since XIV left, I think, the vol market was never quite the same after that, or it just got different, right? Because there was a different sort of supply and demand out there. I know there's still, I think, some discussion about that, but it still seems like that constant supply of seller, things did not drift back as quickly, it felt like, or vol did not get smashed as hard sometimes, at least in the XIV era that I can recall. So to be honest, I think it's good to get rid of leverage products. I got to be honest, VXX works pretty well for what it is. Remember, it's dependably crappy, and they just buy a future and then they go roll. It's in the market, but it's not, because they're kind of always rolling. It's not it doesn't just perform the brutality that the more leveraged products did. And also for the underwriters or to have the short futures is just, I think they survived this brush with death twice and they're getting out of Dodge. So anyway, I think for that long-term short vol product, which was kind of cool, it's gone, and you're just other ways to do it. I mean, I have to be honest. I think VXX and UVXY, those are potentially on the chopping block. I think at least for ZIV and ZIV and TVIX, there were no options. Because if they did, they'd all go to zero. Can you imagine? Like literally zero.
Yeah, I'm having flashbacks to the day that they neutered, UVXY and all that, SVXY and all that fun stuff. And, what a fun time it was to be an option holder then. This is one of the few times people always get mad that there are no options on these things. This is one of the few times you can be thankful of that for this very reason. That's why there are no options on these things. They're supposed to be anyway, because they can get yanked away at the moment's notice. And
So I think at least I think the end date on ZIV was supposed to be 2030. No, apparently not. I think all these guys are losing. They're going to lose credibility. And I mean, VXX, I usually don't trade it more than a 30-day cycle anyway. As interesting as that long-term stuff used to be, I have not played in that area in several years, to be honest. So it's just what it is. I think our last stuff expired January of 2019. No, the year before. January 2019. So it's just that longer term trade is difficult. It is. So I would say 30 days and out for this stuff. The risk on this has definitely changed. I think VXX is a profitable product. It hasn't really market distorting. And it sort of works, it goes up when vol blows up, and the rest of the time it just kind of goes down. Although not this year. So I think that product could probably stay, but I didn't think, I think TVIX was a poorly designed product. ZIV wasn't bad, but too much distortion, and you got the elections coming up, and I don't know. I just think they wanted out. They wanted out, and they took their out, and they don't have any lawsuits maybe, and they thought this was a good time. So that's the best reason that I could give for all that stuff. Yeah,
we've chronicled the saga of TVIX many times, even quite recently during the crazy melt-up of TVIX. If you want to know why they're probably getting the heck out of Dodge, just pull up a chart of TVIX for the last 6 months, listeners. I'll probably inform you. This crazy, insane spike during all the madness. It went from about $40 all the way up to $806. That's closing intraday, I believe. It went up to 1,000 even intraday. So this is just an absurd product. Who was at that point may think that's great, but that high amount of AUM, we talked about that before on vol views, that posed critical challenges to the market and indeed to Credit Suisse. So it was teetering on the brink right then. Some people thought it might get shut down then, and then of course it came off that precipice. It seemed like it had survived, and that was apparently enough for Credit Suisse. They've been to the brink with TVIX, as Rock Lobster mentioned, a few times now. Sometimes due to market stress like this, other times just due to the absurd nature of the product and the cash flows going around it. So they probably deciding discretion the better part of valor here. This does leave VXX now quite literally the last of the Mohegans out there from a vol trading perspective, at least soon, in about a month. That will be pretty much the last of it. And certainly from an optionable perspective, it was one of the last of the ones already. There weren't a lot of other optionable vol products out of the VIX options themselves. And, of course, Spike's options. And then, of course, you have some of the other ones out there. And there was, of course, the various flavors of SVXY and UVXY. But we all know how fun that's been of late. Speaking of fun, but we'll get to this, I think, a little more on vol views later this week. But we had to touch on it. It's kind of the elephant in the room out there today. And it's a big product. People do trade a lot of TVIX, despite the fact that we slam it on an almost weekly basis. People like it. And so it is going the way of the dodo. If you're holding these things, another reason why we say these Franken products, particularly these ETNs, big caveat out there, they can go away at a moment's notice out there. Let's see what's lighting up the tape out there. A bit of a weird one out there today from an overall volume perspective. Number 10, that'll tell you what kind of a crazy day we have, because number 10, Tesla's only number 10. A paltry 147,000. I can't remember the last time Tesla was outside the top 5. It's been quite a while. So it cost you $1.47 to break into the top 10 today. Listen, I get you all the way to Tesla. Number 9, we've got Snap at about $1.50 even. Number 8, NIO, $1.54. They've been in the top 10 a lot of late and back there again today, number 8. Number 7, our friends across the street there, Boeing, $1.59 on the tape. Number 6, a newcomer to the top 10. This is Virgin Galactic, ticker symbol SPACE. doing 196,000 contracts out there today. I'm looking at it's got a big pop today. It's up 15%, 2.25, trading to 17.25. So some big news out here. Some folks, it's going to help train astronauts for NASA. How crazy is that? We have these private companies training our astronauts for NASA. What a weird world we live in, where NASA's kind of just hiring out all these private companies anymore. I don't know what the hell NASA really is anymore if they're not going to space. So that's a conversation for another day. Number 5, Facebook. 206 on the tape. Number 4, American Airlines, 239. Number 3, good old softy, 245,000. Number 2, AMD, 263. That means number 1 with a bullet, Apple. Once again, the Titan reigns supreme. 448,000 contracts on the tape. Let's look here really quickly. Earnings front, not a heck of a lot. If you're interested, a lot of people have been. I'm guilty of this myself. I've checked out what it means and how much it costs to rent an RV these days. If you're so intrigued, you may be interested in Winnebago popping off before the bell on Wednesday. I got a feeling they're probably going to have done pretty well over this last quarter, because I'd never looked at an RV or anything Winnebago or camper in my life. And in the last couple of months, I've checked it out, because who wants to stay in a hotel or fly, right? So I'm guessing their number is going to be pretty good out there. BlackBerry, kind of the brand licensing after the bell on Wednesday. They got Nike after the bell on Thursday. And our old friend, the Rock Lobster, I should say the Meatball's favorite, Darden Restaurants before the bell on Thursday. You can get all these names and a lot more on the website, theoptionsinsider.com. The season report still up there as well. You know what? I'm going to have to hold off on this, but the search data, it's kind of halfway through the year. I'd like to check in on the options search data. I will say this, Mr. Rock Lobster. I will leave you with this before we get to the odd block. That unfortunately, Maine's position at the top of the heap of option searches has been toppled. I mean, you were already down to number 2, you had fallen a bit, and now I'm sad to say that you are an afterthought. Maine. You see, what I'm saying, Mr. Rock Lobster, is that you have failed personally, and that you have not done enough option searching over there in Maine. And as a result, Maine off the list now as we head on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Welcome to the Odd Block. Let's see what's lighting up our tape today. We have unleashed the Eye of Sauron once again. And he has returned with some interesting newcomers. I think all 3 of these might be newcomers. At the very least, I haven't talked about them in quite some time. Kicking things off with Agilent Technologies, Inc., ticker symbol A. This is a public research, development, and manufacturing company. They were spun off from Hewlett-Packard. They were spun off in 1999, so it's been a while. This ticker symbol A. Been around long enough to get ticker symbol A. So that stands for something right now. 88.82 is where they're trading right now, up about a dime on the day. So not a heck of a lot going on today. A year ago, they were trading 72.5, so a wee bit south of where they are right now. Then they trended down pretty quickly, down to about 65 and change. That was in August of last year. Then they rallied slowly over the course of the rest of the year up to January, where they got up to about 89. Looks like their high was a little bit north of that intraday, about 93 or so. And then, of course, we know what happened to the tumult of February and beyond. They sold off pretty hard. They got down as low as 61.13 in the height of the madness of March, and then kind of have been on the rebound ever since. Been a few sell-offs there, but mostly it's been upside. Got up to about almost $80 in April. Then it kind of sold off briefly again back down to 73. Then it's been back up again ever since, all the way up, peaking out at 91 and change back a couple of weeks ago here in June. Then it kind of sold off again down to 85 and back up to where it is right now, up to 88 and change. So interesting back and forth story over the course of the past year. Let's see what our Eye of Sauron uncovered out here for our first name out here. Looks like we got some call paper out here to the tune of the AUG 97 halves. So a wee bit out of the money calls, Mr. Rock Lobster and AUG. And looks like someone crushing the bid about 3,000 times. These were $1.40 at $1.66. And someone coming in and say, oh, $1.40 bid, huh? I will take all of those to the tune of nearly 3,000. These are going up here this morning. These are earnings. Let's see, there are earnings in this cycle, and they are coming up on the 13th. So a little bit of earnings juice out here, which always makes it dicey to sell a call in that cycle, because if you're looking for that nice, juicy erosion to kick in, it's not going to kick in for a while because you got that event. So this guy's going to be holding on to a large amount of this juice until the 13th of August. So I guess he's comfortable with that because he has drawn that line in the sand to the upside this time here in A. So Mr. Rock Lobster sounds like someone looking to take advantage of a little bit of earnings premium and is okay dumping the stock well above its 52-week high if it should get there, sir, by August. Is that your takeaway as well?
Well, it is a tech stock. It is an old tech stock. Agilent got spun out from Hewlett Packard, I think, in 2000. And, it lopes along and makes some returns. I think we're at you have to look at this and go, okay, people are back for yield plays. That's how I guess TOSAW will comment when he probably talks about this, but you got 3,100 SPX and VIX is still in the 30s. So there's a lot of juice out there. I mean, if you're careful, but, selling upside calls, like where the heck are we going to go from here? So I have to say, I don't think it's a terrible idea, to be honest.
Oh, Mr. Rock Lobster sounds like he's liking it. He's putting it in the savvy column, which means we'll put it in the to be watched column. We'll come back between now and August, see how our friend fares. Now, that doesn't give you any pause, Mr. Rock Lobster. I know writing it in the earnings cycle because, you're not going to get that juice until very close to the end of that option's life. Does that not give you any pause on this one?
My guess is the person that wrote that call had no idea, to be honest.
Yeah, that's probably true. They're like, hey.
I own 290,000 shares and I'm just going to sell that and, whatever. I get taken out and, those are not problems I have in a pension fund. So I'm guessing that they were earnings agnostic on this one.
Yeah, that's you're totally right on there, though, that they probably had no idea that they were just saying, hey, look, they looked at the expiration graph. I can sell it at what effective price? All right, I'm in. Doing it 3,000 times, probably more piling in after the fact. But we got to move on to our next name. A lot of newcomers on the odd block today. I kind of like this. These kind of weird days, sometimes weird names trickle into our odd block, Eye of Sauron's Gaze. And next up, he has fixed upon Sibane Stillwater Limited, ticker symbol SBSW. This is definitely a newcomer to the odd block here, trading $8.42. Good day for them, up 55 cents or nearly 7%. This is the largest individual producer of gold from South Africa and one of the 10 largest gold producers globally. So clearly one that's on Uncle Mike's radar, at the very least, out here. Ticker symbol, like I said, SBSW. A year ago, was trading $4.66, so it's been a good year for them in spite of all the madness that happened. They topped off at 13 and a quarter. Guess when? February 19th. We all know what happened after that. Yeah, straight to the downside. Down to $3.68. Intraday, they hit 3.5. So a big sell-off out there from 13.5 to 3.5 in the span of, looks like about exactly a month. And then they slowly fought their way back up to where they are right now, right about 8.5. That's pretty much near the upper end of the band. They topped out 8.86 recently. So they're near that upper portion of that recovery. So they're not quite all the way there, but they're about a little more than half of the way there on their way to clawing back up to 13 and change again. Let's see what our Eye of Sauron has plucked out of the ether for us today. Oh, looks like some call paper, but also, Mr. Rock Lobster, looks like someone perhaps fading a little bit of this rally to the tune of a 2,500 lot. It's like smaller trades today, but also kind of interesting. We like to, it's not all about blocks of 104,000 like it was in Caldera last week, listeners, even though those are fun too. Sometimes it's finding the nuggets that is more interesting and more insightful. 2,500 lot of the OCK 10 calls, so 10 even strike, going up for 79 cents. This is about a dime off the bid there, Mr. Rock Lobster. These are pretty wide, as you might expect. There were 70 cents at $1.10. So it looks like someone harvesting a little bit of the old risk premium, this time over there on the Philly. Let's see. There are no earnings in this cycle, so not an earnings play per se. Mr. Rock Lobster, it seems like we're 2 for 2. People coming in, this time going out to October and drawing upside lines in the sand and say, if you get back to 10, I'm willing to dump it right around 10.80. What do you think of this one? Is this one as intriguing to you as the last, sir?
Well, I'm looking at this one, a mine. Is it intriguing? I think all all the minors are intriguing at this point just because of where things are. Like, okay, are we gonna have are we gonna have a little bit of more of a metal rally, or is the dollar going to the toilet? Debt, blah blah. So I think all of these are, from that point of view, are interesting. And I mean, October does give you quite a while, but it looks kind of buy rate action-y to me. Once more. So, yeah, I mean, there's yield there. I mean, there's 79 cents on a $10 stock. So, would you, if you could close your eyes and say from here to the end of the year, I'd be happy with 10% on my 401k. Would you be happy with that? And if you get taken out on this, you're going to do closer to 20 for this stock. So I don't know. I have to say from that point of view, it doesn't look so bad.
It's interesting. You're right. 10% for this year, given where we're teetering on the precipice of right now. That a lot of people will probably take that and run out here right now. By the way, worth noting back really quickly to SBSW. I mentioned 2,500 lot of these Octane calls. Worth noting right around the same time. Not quite a spread, but about a minute apart. So makes me wonder a little bit. About 5,000 of the July 7.5 puts also went up on the bid for 32 cents. Maybe a bit of a ratio/covered combo out there, selling 2x of the puts against the upside. So you got some stock. You don't mind dumping it to the upside. And if it gets down to a certain level, in this case 7.5, you don't mind picking up a little bit more, hence the ratio of 2x here on the put side. So it looks like someone harvesting a little bit of the old risk premium on both legs here in SBSW here. So line in the sands in both directions, but more sizable there to the downside. So we're going to definitely have to come back to this one now that we see this put leg here as well. All right, and last up here, let's move on out. Interesting kind of names on the radar today. Seems like it's all resources here. We're going out to Fortuna Silver Mines. Ticker symbol FSM, trading, if the other one was a little bit too rich for your blood, at $8 and change, listeners, we got you covered here. $4.65, up 40 cents, or nearly 10% today. Good day out here for Fortuna Silver. This is a Canadian public silver mining company based in Vancouver, BC. Easy for me to say out here. This is the name that a year ago was trading shy of $3, $2.99. Then it rallied up to about $4.29 in August. Then it kind of sold off again to $3 and change in November, and rallied again all the way into February, right around $4. And then we know what happened. Sold off pretty hard in February. Got down to $1.47 at the nadir there in March. Then it turned around again really quickly. Got up to nearly $3 again, $2.83 by the end of March. Sold off again to $2.03 by early April. Then it started turning around again and got all the way up to very recently $4.80. It kind of has been bouncing around these levels. That was back on June 1st. And over the course of the last month, it's kind of been vacillating around this level from 4 up to 4.80 or so. Now back on the upswing, up to 4.65, up 40 cents. So a very volatile period out here for Fortuna Silver Mines. Let's see what our Eye of Sauron has uncovered for us today. July, all calls today, Mr. Rock Lobster, with the exception of that put kicker leg there in SBSW. We got 2,000 of the July 5 calls going up for 15 cents. Lift in the offer there. These were dime at 15. Interestingly tight out here for some slightly out-of-the-money calls here. But these are front month near out-of-the-money calls. I suppose that makes a certain amount of sense. There are earnings, but not in this cycle. The earnings are on the 5th of August. So, Mr. Rock Lobster, looks like someone taking a swing for the fences up there for 15 cents 2,000 times. Could have been an artificially tightened market, of course, by something lurking in the book, so that could kind of throw off a little bit of this as well. So maybe first off, let's start there. What's your spidey sense telling you about this one? You think this guy's overwriting? He got someone to gobble up his offer 2,000 times? Or you think he's swinging for the fences here in Fortuna Silver Mines? And if so, what do you think about someone paying, what do we got here, 15 cents on a $4 and change name for a pretty near-term swing at the bat, sir?
You're not going to believe this, but right now, those calls, they've printed 39,000 total, and they're trading 35 cents.
Well, there we go. I guess that was, so that's the old market maker dream, right, of how are they now? Oh, no. I have to go to the bathroom.
I'm looking at live ball, and just all the volume is green. Buy the offer, buy the offer, buy the offer, buy the offer, buy the offer. So,
oh yeah, 39,769 as of a few minutes ago. So someone likes these.
There's some body parts that are strewn across the street. And I think they've got some issues. So that might be one to be watched category for sure.
I am putting it in as we speak, sir. Nearly 40K on the tape, running over those poor locals. Whoever's got to stand there and be like, sure, I'll sell them at 15 cents. That guy's wearing it right now to the tune of nearly 40,000 on the tape. We're coming back to these bad boys for sure. These are coming away in a couple of weeks. So the 2,000 lot that came across our radar, because that was probably one of the first that kicked it off. He's doing most of them in small chunks. That's actually the biggest chunk he did was 2,000. The rest were 1,500, 35 cents, 900 for 35 cents. You're right, he bid these things up like crazy. 786. So a lot of small chunks. This is kind of what we've seen a lot lately, listeners. These big orders going up in smaller piecemeal chunks here. But we're going to keep an eye on this one as we keep on rolling. It is Monday. It is time to unleash the beast. It is time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, everybody. Welcome to the strategy block, the portion of the show where Uncle Mike comes on down from the mountain, stone tablets in hand to dispense some options, wit, and or wisdom. Mr. Uncle Mike, sir, what do you have in store for us today?
I want to quote the Viceroy on something, and it's kind of just something I think is very important in a market like this. Anything that you can do with a stock, we can do better with an option. I want you to think about that. Now, of course, I'm not talking about an option where there's like no liquidity or anything like that. Of course, there has to be liquidity. And of course, that does not factor in tax consequences. But without those factors, what the Viceroy once said is very true. And I want to kind of elaborate on that a little bit. And that during this pandemic, when we've had markets going haywire and things, there's people that have had stocks that are outside of an IRA and they've been down in value and markets are going down, but they can't sell them because of the fact that they have such a low cost basis on the stocks that it would cause just a ginormous tax problem. So from the standpoint of financial planning, you really have to have that kind of embedded in you, not only as a trader, but also as an investor. Now, of course, let's say that you bought XYZ stock at 1 and it's trading at 500 right now. And you've had it for years and years and years and years. You live in California or New York where the state tax will kill you. And it's just not going to work. Now, I'm not sure if capital gains taxes in California or New York, but I'm just assuming since there's such high tax states that there's a capital gains tax for the state. Who knows? But anyway, where I'm going with this is that you have to have a plan for what you can do if the market can go down without selling your stock. So let's say that you're in XYZ stock, it's trading at 500, and you're looking at it and you're like, you know what? I would have loved to have taken profits at 450, but the tax implications are just too great. I could have never done it. So I've ridden it up higher, so it's obviously better right now. But what can I do? Well, there's a variety of things with which you can do. Of course, you can hedge the stock by buying put options, by buying a put spread. Let's say that you want to get out of the stock if it were to go back to 450. But you know what? Let's say all tax issues aside, if this stock were to go back down to 300, well, I'd buy in again. This thing would be great at 300. Well, if that's the case, then I think it would be wise to possibly consider doing a vertical put spread of some sort. Now, the other thing that I want to mention right now in terms of using options efficiently from a tax standpoint goes back to what the Viceroy said. Anything that you can do with a stock, we can do better with options. So let's say that you have an IRA. In an IRA, I personally would, and I would say probably 90% of all the money that I personally manage for clients is IRA money. And what I love about the IRA is the fact that I can get in, I can get out, I can buy, I can sell, 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 I can do whatever the heck I want. And there's absolutely no tax ramifications whatsoever because of the fact that until you take a distribution from your IRA, that you won't be taxed. Now, of course, you'll be taxed at ordinary income when you take the distribution once you're 59 and a half or older, or you're taking your RMDs at age 70 and a half, whatever the case may be, and that's fine. But I think you'd be foolish not to take advantage of the option product because of the fact that, let's say that you want to have leverage, meaning you want to buy a little bit more. You have the ability to do that with an IRA by using options. You don't have to trade on margin. You have a limited risk with the ability to do that. If you want to sell premium on large amounts of money, if that's what you have, you can do it. And if you have it in the IRA, you're able to do that, and you don't have to worry about paying taxes on the premium month in, month out. The only time you pay taxes in an IRA is when you take money out. Now, if it's a Roth IRA and you never got a deduction for putting the money into it, which you wouldn't with a Roth, then it's tax-free money. And that's where it can get very exciting. There's things that we've done for clients of converting traditional IRAs to Roths and trying to take advantage of taxes from that standpoint. There's a lot of things with which you can do. Now, with that, let's say, well, but Mike, I've built up my fortune outside the IRA, and I do have a pretty sizable IRA, but maybe only 20% of my net worth is in an IRA. Mike, what the heck can I do? Well, here's what you can do, and this is something that I've been doing with clients for years and years and years. You can buy more boring investments, so to speak, outside the IRA, whether it is bonds, selling covered calls on bond ETFs, which I talked a little bit about last week on the strategy block, perhaps using the annuity or life insurance route, going that way. Stuff that you're really feeling safe with and comfortable with, but you're not going to make a ton of money outside the IRA, so there's not going to be a ton of taxes. Now, there's, of course, ways to avoid taxes outside the IRA, but what I'm talking about is how to avoid losses. Within the IRA, though, at that stage, what I've done with clients is that's where we're buying calls or we're doing my aggressive trading strategy. It's my simulated index concept. Now, the ratios and the numbers, of course, are going to be different for everybody, but the concept is use the money outside of your IRA to keep things stable. But within the IRA, use that to be a little bit more aggressive. Now, you might say, well, but Mike, if I lose on my aggressive money, I just lost my IRA money. Very valid point. So with that, that's why I think it's important to have a safety net, so to speak, or some type of rule that I talk about. Like my personal rule is when the market's negative, I have very little amounts of money in the market. And that's just a very hard and fast rule that I have for myself as well as for client money that I trade. So I think it's very important that you have that. By doing that, you can use leverage within the IRA. So with that, I would encourage everybody to really work to take full advantage of IRAs as best they can and really work to use this option product even in your long-term investment plan. It's a very valid product, and there are major opportunities that you can have that you typically won't when you're just buying mutual funds. And that my strategy block for today.
You guys are certainly working the send button on your feedback for the shows here, so let's get into a little bit of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, let's see how many of you guys we could squeeze in here towards the end of the show. We'll get to more mail block questions, of course. On the Thursday show, Bullbeard Jeff was listening to us, and we commented earlier that VXX, now kind of the last of the Mohegans in the vol space. He points out, rightfully so, he's like, well, what about UVXY? And indeed, it's sibling their SVXY. And you're right, they are still out there as well. I think I did mention them as one of the few optionable choices out there. But you're right, they still exist. I tend to look at them a little bit askance these days because they are effectively neutered. We just talked about them earlier about how, when they cut them pretty much mid-session there, how fun it was to be options traders and indeed premium holders out there in products like those. So they do exist. You are correct technically there, Bull Bear Jeff, but not my favorites. But hey, dearth of other options means that might be a place you may want to check out there these days. Our other buddy there, Mr. Dave Lincoln of Short Vol fame, chiming in saying about the death of TVIX, saying you got to think they made a couple of bucks on TVIX when it went to 1,000. Maybe these leverage ETPs are becoming more trouble than they are worth, though, for their clearing firm. I think that's pretty much what we were saying there, Dave. Even at that massive run to 1,000, people were waiting for this thing to collapse and implode upon itself. So, yeah, they probably made some money, but it was kind of short-term gains versus long-term horrific potential disaster for the marketplace. I got to imagine they crunched the number. Clearly, if it was worth it for them for that amount of risk, they would have stayed in it. So clearly they looked at that and said, you know what, we dodged a bullet yet again. I'm kind of surprised, quite frankly, this news didn't come a little bit earlier in the cycle, maybe right after that March meltdown in the space, but they waited a little bit. And now, at least in near-term quieter waters, they decided this is the time to get the heck out of Dodge. More guests of the show chiming in. Jim Carroll was on VolViews 2 weeks ago, and he's chiming in saying he's at VIXologist, if you want to give him a follow on the old Twitters there, listeners. He says the VIX term structure back to screaming indecision. If you listened to VolViews a few weeks ago, you noticed that was the name of our show back then, when that's what the VIX term structure was saying. Mr. Rock Lobster, are you in cahoots here with our guest? Mr. Carroll, do you think the VIX term structure is once again back to quote-unquote screaming indecision, sir?
I do. As I recall, there was a little vol man 2 weeks ago around this time that was like, I was just looking for like a 2-point move either direction, relatively fast. I think we still have the same thing. It would not surprise me this week if we see 25 or 45. So I would widen the band a little bit because we're at a higher relative level than we were then. But still, crazy town. What the heck?
Crazy town, indeed. That's why we haven't seen Volman in a while. You were on vacation. Volman needs to get back out there. His audience is demanding, and our audience, indeed, demanding more appearances of the infamous Volman. I mentioned earlier in the show there, a frequent listener there, Mr. Scott Somer, he was concerned about you this weekend, Mr. Rock Lobster. He sent us a note that the temperature in Caribou, Maine hit 95 degrees on Thursday, which beat out the record high for the date of 90 degrees set all the way back in 1955, and it said record heat will continue into the weekend, and he included the hashtag cooked rock lobster. So apparently he was concerned about you. Clearly you are on the show here, Mr. Rock Lobster. You survived this impressive heat wave in Maine, sir.
Yeah, I saw that. Cooked. It's good to have fans, but Caribou was actually much warmer than we were. The coast was not so hot, but I can imagine Caribou at 98 degrees is pretty freaking hot. Every 50 years it probably gets that hot up there.
Yeah, the fans watch out for you up there. They're out there taking pictures of license plates in Maine that have option stuff. They're watching the weather for us in Maine. So clearly you have a devoted cadre of fans for the Rock Lobster out there, sir.
I'm like I said, my heart is very warm right now. I have to say, very warm.
Now I got National Guard on my doorstep. I get no love, but the Rock Lobster gets a little bit of heat. And all the concern heading out there to the Rock Lab. I'm glad to see, sir, you have your supporters.
You have to admit, like National Guard in Chicago, not much of a surprise. 90s in Maine,
true.
That's
true. That's true. Maybe not exactly as surprising. As we head on into our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. Welcome to Around the Block. By the way, I was just joking. Listen, I know a lot of you hit me up with concerns, so I appreciate all of that. I just like to push the Rock Lobster's buttons. But, of course, it is the time for the show where we go around the block, tell you what we're watching for the rest of on our trading screens until we get back together here on Thursday. You mentioned there still are some earnings popping off. We got this screaming indecision out there in the vol space right now. We've got a lot of interesting nuggets, a lot of vol products coming off the board, making things a little bit more intriguing. So a lot to pay attention to. Mr. Uncle Mike, sir, when you're drawing your nose away from your IRA option trading screens, what is on your radar until we gather here together on Thursday?
Well, I'll quote the band Boston. I don't know if I'm kind of botching this a little bit, but I'm not concerned about indecision because I have my peace of mind in that I have my risk management in place. So watching the numbers, watching the 3,100 level now in the SPX, watching the news watching any news coming out, and just seeing where we're going with all this because we are in the summer. A lot of times in the summer, markets aren't quite as friendly, but they can be. So I think it's very wise to be short-term cautious at this junction.
Short-term cautious. I've been that myself for quite some time now here. So a lot of interesting things, a lot of interesting shoes out there waiting to drop as we head on out to the Rock Lobster. Mr. Rock Lobster, I should say, hashtag cooked Rock Lobster. What is on your radar for this week? Perhaps a return back to the 90s in temperature, sir.
Well, actually, of course, it should be boiled rock lobster because, that's what happens. They get boiled.
That is true. He mixed his metaphors.
He did mix his metaphors. Boiled or grilled, actually. I do like the grilled lobsters, although you have to dispatch them first before you put them on the grill. I don't know if everybody likes plunging a knife into a lobster head, but anyway. What is going on? Like I said, we are now 2.5 points from 30. And are we over this or not? I have to be honest, I don't know. All I know is Tech is not. Tech is way over it because I think we're at an all-time high for the QQQ, unless I'm totally wrong here. But we are darn close. We are darn close to an all-time high in the Q. So if you missed your chance at 165, they're trading for 245 right now, just from 3 months ago. So anyway, at least as far as tech land goes, maybe everybody's realizing, wow, maybe this tech thing is the future. And Main Street stocks, though, I think are still lagging in the S&P 500 quite a bit. Oil, so I like to see some money start to flow back into, like old-fashioned businesses, but unfortunately, old-fashioned businesses are still suffering more from. But also, those are consumers of tech. So I don't know. I throw my hands up. I don't get it. But I wouldn't be surprised if I start seeing vol taking some pretty good, 2.5 point steps down over the next couple of days, if nothing really is happening, which is what we got now.
I don't like such things, sir, because that moves it away from my crystal ball prognostication. So we shall see if the Rock Lobster is correct, or if our prognostications on the crystal ball were correct. When we come back together, at least for vol views, on Friday. Unfortunately, that music, though, means we're done, at least for this show, at least for right now. If you're saying to yourself, you know what, I need a little bit more volatility, I need a little bit more skew, I need a little bit more options action in my air holes, well, stay tuned. You're listening live, we'll pump some fun stuff into the chat. We'll be back in exactly an hour with our old buddy, Mr. Koplo Rothy, formerly of the SBSW, now hanging his hat in the crypto space to talk crypto options, volume, volatility, skew, all that good stuff, what's going on in the world of Bitcoin and crypto options. We'll get to that in the Crypto Rundown in exactly an hour. In between, of course, we'll pump some fun stuff. And if you're listening after the fact, as I know many of you are, just hit next on your device of choice. You'll get right on into that show as well. But before we go, let's go back around the horn. Let's start in the land of the Uncle-list of Mikes. Sir, if I'm looking to someone to help me navigate these IRA options waters, where should I go? What should I do?
Go to stcharleswealth.com, learn a little bit more about me. Feel free to call me directly, 630-885-0017. Would be more than happy to have a conversation with anybody if you'd like to talk to a financial advisor that's not afraid to use options in an IRA.
I like it. stcharleswealth.com, the place to go. And Mr. Rock Lobster, if I want to join this vol legion, this vol trading club, get a sweet hat, maybe learn the secret handshake, where should I go? What should I do?
Come on over to optionpit.com. Check out the memberships page. We got lots of stuff. We've had a pretty good year. We have helped our clients navigate all this. They're quite happy. So what the heck? You might as well learn how to do this volatility stuff because apparently it's not going away.
Unless your prognostication is correct, then it's at least trending down here. I think you said VIX going to literally zero by the end of the week. Was that your prediction, sir?
Let's see if there is I'll be happy with two handle. A 20 something. 28, 29. 28, 29.
Oh, okay. I thought you were saying a two-handle in VIX for a second. I was like, wow, that would be quite impressive.
28, 29. I'm sorry. I misspoke. 28, 29.
You heard it here first. The Cook Rock Lobster expecting a two-handle in VIX by the end of the week. Turn into vol views this week to see if he's correct. And on behalf of the Rock Lobster and the Uncle-list of Mikes, and indeed myself, I thank all of you out there for downloading, streaming, subscribing, for sending in such great questions and comments. You guys keep us on our toes, and we love it. We'll see you back here in exactly an hour for the Crypto Rundown, and then back again later this week for OPR and all the other fun stuff that we have cooking for you, and then back again on Thursday for more of The Option.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.